Let's talk escrow. What is escrow in medical billing and the revenue cycle? Maybe you've looked in your software and you've seen an amount sitting in escrow and immediately thought something was wrong. The truth is, escrow isn't necessarily a problem. In some cases, it's a normal part of the payment process. By the end of this section, you'll understand exactly what escrow is, why it exists, and why seeing money in escrow isn't necessarily a problem. So what is escrow? Escrow is a temporary holding area for money that has been received that has not been fully applied to a patient's account just yet. Think of it like a waiting room for payments. The money's been received, but it has yet to be recorded. The system or software is waiting for the payment to be matched or applied before it becomes a part of the final accounting record. Before we start, we must talk about the difference between received payments and applied payments. One of the most important things to understand is the difference between the two. Receiving a payment means that the payment is now in the organization's possession. It's in the bank account, or the check has been received, or the electronic payment has been processed. Applying the payment means that the money received has been applied or allocated to the specific patient's account, claim, encounter, or line item charge. The two don't always happen at the same time, and that is where escrow comes into play. So exactly why does money sit in escrow? There are several situations that are quite normal where money might temporarily sit in escrow. Let's talk about a couple. So one example is that the patient's copay has been collected up front, or a deductible payment has been paid in advance of the claim being created and charges showing up in that patient's account to which the payment can be applied. So what will happen is the system will hold that money in escrow temporarily for us to then apply or post the payment against that particular charge or claim. Another example is a payment that's arriving before the payment details have been received. So in many instances from insurance companies, there may be a payment processor that issues the payment, but the details for that payment that will include the line items for us to apply that payment may come at different times or from different departments in that insurance company, and sometimes from two separate companies entirely. For example, you might receive a virtual credit card payment by which you need to process that payment from one company, but the details you might need to retrieve from the insurance company's website for us to be able to apply the payment. Another couple of carrier types that we see this happening more often are our personal injury or workers' compensation carriers, such as our auto insurance carriers or our employer's workers' comp insurance. Oftentimes we have payments coming from a different department than the department that issues the details for that payment. So when the payment is received, we have to wait for the details to arrive so that we can ensure that the payment is allocated and applied properly within our software or system. Having an escrow supports our financial accuracy because it gives us a place for our payments to await proper posting. So it creates a level of accountability. That way we don't lose visibility from the money that has been received but not yet applied to our patients' accounts. So remember, escrow is not necessarily a problem, but it's often a way to represent the money that has been received but is just waiting to be posted and applied correctly.